Hello, this is MP Balakrishnan. Welcome to BALAS, Accountancy Special Classes. Well, today we are taking up a new chapter called Depreciation. What is meant by depreciation? To put it simply, think that you have purchased one vehicle today. Say one car for rupees 10 lakhs. After a few years, let's say after a period of 5 years, when you want to sell it, you find a car has got a value of rupees 4 lakhs only. Due to its usage, wear and tear, and its obsolescence. What do you mean by obsolescence? Obsolescence means due to new inventions, the car has become obsolete. So rupees 6 lakhs, that means 10 minus 4. Rupees 6 lakhs is the fall in the value of the asset. And the same is called depreciation. So you understood the story behind depreciation at least, okay? Well, a lot of nice definitions about depreciation have been given in any standard textbook, especially so nicely it has been given in the D.K. Goel's textbook. The book I have been referring in most of my episodes. The textbook has also given in a very lucid language matters such as features or characteristics of depreciation, causes of depreciation, need, importance, or objects of providing depreciation, factors determining the amount of depreciation, or in other words, estimation of annual depreciation extra. In just a single reading, you will understand and everything, okay, because it has been written in such a lucid language. I suggest you read it somehow, okay? Even otherwise also, any standard book prescribed for ISC or Cbse, they are given all these factors very nicely explained. My task is to work out sums and convince you the answer as has been given by the author. Well, this episode as well as the following episodes will consist of explaining the correct answer of certain chosen objective type questions, followed by working out the toughest practical questions of the textbook written by D.K. Goel, Cbse edition year 2019. Okay, fine. To start with, please keep it in mind, fixed assets only depreciation is charged on. Or in other words, depreciation is charged on all the fixed assets except land. Why depreciation is not charged on land means land normally gets appreciated. Okay, hence it is not charged. Fine. Let us now start with the methods of providing or allocating depreciation. Various methods have been devised for providing depreciation. Different methods are suitable for different assets depending upon the nature and type of the asset. 8 methods are there. These are straight line method, written down value method, annuity method, depreciation fund method, insurance policy method, revaluation method, depletion method, and machine hour rate method. Well, my dear students, don't get scared. Only the first 2 only are prescribed in your syllabus. That is straight line method and written down value method. If you go for a professional qualification extra, of course, you have to master all this. Okay, let's keep it in abeyance now. So what is prescribed for you is only straight line method and written down value method. And today I'm especially focusing only on straight line method. Now, how to calculate depreciation under straight line method? This is the formula. Annual depreciation will be calculated as follows. Original cost of the asset minus estimated scrap value divided by estimated life of the asset. Each time I want to make it very clear. Original cost of the assets. Please don't be under the impression whatever you paid originally to procure it from the supplier is not the original cost. the cost incurred in between from the place of purchase till the machine is installed and put to use, that is called installation expenses extra, are also included in the original cost. Am I clear? Yeah. So briefly, original cost plus freight plus installation expenses constitute the original cost of the asset. Okay, fine. And what about repairs? Sometimes they'll just give repairs for the machine is so much. You just ignore it. Don't consider it at all. Repairs is a revenue expenditure and it doesn't have to be considered for the purpose of determining depreciation at all, right? You simply ignore it. It does not add to the value of the asset, as in case of installation expenses or any other procurement expenses with regard to an asset, right? Fine. Now, this is the formula. I repeat it. Original cost of the asset, I explained to you just now, and estimated scrap value. Why estimated scrap value comes to the point at all? Well, you know, a fixed asset does not get vanished and become zero on any particular day. There will be something left out, whatever it may be. After a number of years usage also, something will be left out. And it may have some realizable value also. You sell it and get something. So that is reduce your cost. That's why original cost of the asset minus established scrap value. Okay? And divide this amount by the estimated life of the asset. Or this minus this, let us say that is the net utilization of the fixed asset value, net value of the utilization. Okay? That you divide it by the estimated life of the asset. So why this straight line method? It is called straight line method, first of all. The amount of depreciation that we will be charging year after year will be a consistent amount. That's a straight line. It has got other synonyms like the equal installment method or fixed installment method. That means constant amount. I'm not at all mentioning about the way written down value method today. When you learn that method also, you will be still more clear about straight line method. Okay. Now, to make things very clear, I mean, how this depreciation, annual depreciation is arrived at under SLM, a small sum I'm taking up. The data is like that. Original cost rupees 2 lakhs. Mind it, I just written original cost. It may include original cost of what we pay to supplier plus freight and installation expenses extra. Anyway, everything together. Original cost is 2 lakhs. Scrap value likely to be 30,000. That is nothing but estimated scrap value. And I am estimating a life of 10 years for the particular machine. So what will be the depreciation written off annually will be just simple, 2 lakhs minus 30,000 divided by 10. So things are very clear. That means 1,70,000 divided by 10. That means rupees 17,000 a year. Throughout 10 years, a consistent amount of 17,000 will be charged off by way of depreciation against this particular asset. I think I'm very clear to you. Okay. Now we are taking up 2-3 small objective type questions. In a gradual way, you learn it. Okay. It will be followed by full-fledged sums. In fact, depreciation chapter, whatever has been prescribed for is very simple only. It's a very deep they go for our ICCW and I think very deeply they go, but it's very simple only. Okay. So that's full-fledged sums we'll take up gradually. Today I'm taking just 3 short questions, objective type questions. They are given for answers for it. Among that, one is the correct. That correct one I will explain to you. Okay, that will suffice your requirement, I'm sure. And as usual, these questions, whatever I will be discussing today, the type version of the same, I will be sharing you as usual. And as per your requirement, write down and keep it with you. Thank you. Hello students, I am taking up 3 number of objective type questions from the textbook written by D.K. Goel, Cbse edition 2019 year. Okay, the purpose is to make you people very comfortable to start with. I mean, footstep, a very comfortable footstep. We will be probing the subject deep and deeper in the episodes ahead. Well, the first question is question number 2. I'm reading it out so that you can pause it as per your requirement and write down also. Well, it is as follows. Ambuja Cement Limited purchased a machine on 1/1/2019 for rupees 1,20,000. Installation expenses were rupees 10,000. Its residual value after 10 years is rupees 5,000. On 31/3/2019, expenses on its repairs were incurred to the extent of rupees 2,000. Depreciation is provided under straight line method. Books are closed on 31st March every year. The amount of depreciation for the current year will be the different alternates. What they are given is A rupees 3,125, B rupees 3,175, Z rupees 12,500, D rupees 12,700. Well, I have worked out and confirmed. Answer A is correct. It's as follows. Let us first list down the data what they are given. Cost of machine 1,20,000 plus the installation expenses, whatever it is, and the actual cost will be 1,30,000. I have told you installation expenses will be taken into account. Scrap value or residual value, whatever it is 5,000. Estimated life of the assets is 10 years. These are the data given, right? Annual depreciation, you know that it is 1,30,000 minus 5,000, that is 1,25,000. Because we know that from the cost of the asset, its scrap value has to be reduced so that its total usage value will be taken. And it will be divided by the number of years it is estimated to be used. That is 10, it has been given. So 12,500. That is annual depreciation. Whereas we have been asked to find the depreciation only for 3 months, from 1/1/2019 to 31/3/2019. So proportionately 12,500 into 3/12, it comes 3,125. Here, the most important thing what you have to keep it in mind is that expenses on repairs to an asset will not add to the cost of the machine. It should be ignored. It's just a plain revenue expenses. It should not be considered at par with installation expenses or freight for procurement of the asset. So they'll include like this unwanted information. You should educate knowledge to ignore it. So that's over. Now let us take up question number 5. I'm reading it out. Original cost of an asset is rupees 1,26,000. Salvage value is rupees 6,000. Useful life is 6 years. The rate of depreciation under straight line method. So the rate of depreciation is what you have been asked to find out. So it will be dealt like this. Cost of machine 1,26,000. Scrap value or salvage value 6,000. Estimated life of asset 6 years. So you know that 1,26,000 minus 6,000, 1,20,000 is the usage value, total usage value, divided by the estimated life 20,000 is the annual depreciation. But that is not the answer. What they want is the rate of depreciation. So rate of depreciation is calculated like this. Amount of depreciation upon total cost of the asset. Amount of depreciation upon total cost of the asset. Here the total, see, please keep it in mind, this total is very, very important. Total cost. Why it is that I will tell you. Right. So it comes 20,000 upon 1,20,000 into 100 or 15.87. That's the alternate A is the answer. Okay. We can check it also. 1,26,000, 15.87% into 6 comes the total usage value of the asset. We have to adjust this decimal slightly, but it will come. Okay. Now you may ask, why this total cost? Why not usage value? It has to be taken because if you write off every year at rate of 15.87% on your total cost of rupees 1,26,000, consistently over a period of 6 years, your asset usage value will be rupees 1,20,000, or that usage value of rupees 1,20,000 will be wiped off. Okay, you have to base on the total cost. I repeat, if you write off every year at rate of 15.87% on your total cost of, that means without deducting the salvage or scrap value, you have to base on the total cost. Consistently over a period of 6 years, your asset usage value of rupees 1,20,000 will be wiped off. So keep it in mind, total cost. Whenever under SLM you have been asked to find out the rate, means the base is not just cost, it is a total cost. So total cost, without subjecting this to reduction, the total cost you have to take. Okay, fine. So 15.87% is the answer. Now let us take up the next question 7. What will be the percentage of depreciation under straight line method in the following case? Original cost of machine, rupees 1,50,000. Salvage value after 9 years, rupees 15,000. Repair charges in second year, rupees 10,000. Alternates given: A 11.11%, B 10%, Z 10.34%, D 9.37%. Well, I have worked out and found the answer as B, 10%. And this is the explanation for it. Okay. We are just listing down the data. Cost of machine 1,50,000. Scrap value or salvage value 15,000. Estimated life of the set 9 years. Repair charges in second year 10,000. Just ignore. I tell you, you don't have to consider it anywhere for depreciation purpose. Fine. Now, annual depreciation will be 1,50,000 minus 15,000. That is the total usage value of the asset. That is 1,35,000. And if you divide it by the estimated life of the asset, that is 9, we get 15,000. That is the annual depreciation. Whereas what we have been asked to find is the rate of depreciation. That is nothing but the rate of depreciation I have to base on the total cost. The total cost here is 1,50,000. Okay. So depreciation upon total cost into 100, or the percentage of depreciation on total cost. Okay. I don't have to adjust here anything. Total cost has been directly given. So that comes 10%. That is represented by answer B. Okay. Very simple sum. There is no big deal I have worked out today. This is just to make you very comfortable in that chapter. That's all. Okay. See you soon. Take care.